You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim. We're seeing a pretty good rally today. Let's hope it continues.
And you said this might be the start of a trend that you're calling golden popcorn. I don't think this involves butter.
Well, I think what we're seeing here is a situation that is going to be kind of a intermediate to long-term trend in the gold mining sector. And that is the takeover of companies large and small and properties that have proven up a pretty good resource by the majors as they attempt to replenish their own pipeline. As we've talked about a number of times before, a gold mine is a wasting asset because as you dig more ounces out of the ground, you have less left. And so I believe over the last several years with the declining gold price and the increase in the cost of mining gold, that the pipeline itself has developed a lot of puncture marks in it. And so it's not going to be easy for the majors to replenish their stockpile. The advantage for them is that prices on these companies are relatively low now, and will probably stay relatively low for a while until they get back to the 2011 highs, which might take 18 months to 2 years, hard to say. But in any event, the takeover of these companies, and it could be a small one or a large one, is going to involve premiums to the previous day's closing price.
Is this kind of advice then, if you hold these stocks, hold on to them because somebody might be looking for them and they're willing to pay a high price for them?
If you have a good property, a good company, that increases the odds that they could be bought out by another company. And when that happens, historically, from my experience in watching these and even having a few times happen to me when I had the stock itself, there's usually a premium of about 35 or 40%. So let's use an example. Let's say a gold stock closed yesterday at $2 a share. And this morning trading was halted and they announced a buyout of the company by a larger company for a 40% premium. So, 40% of $2 is 80 cents if my math is right. And that would be a $2.80 stock. And so you would overnight, your position would increase by 40% per share from the day before. And what I think is going to happen is that you're going to see more of that on the quality mining properties and companies, and you're going to see larger premiums. It wouldn't surprise me to see it to be very common to see 50, 80, 100% premium to the previous day's announced price on a particular takeover target. So that's what I would call golden popcorn. You're going to see these things come up. They're going to really pop unexpectedly. And it could be some very large properties. There's a couple large properties with a lot of proven gold resource in BC that potentially could be takeover targets, even as huge as they are, by some of the real giants in the business.
Who do you think is going to be doing the takeovers? Companies perhaps backed by the Chinese government?
Some of that could be taking place. In fact, there was an interesting, what I would call a below-the-radar takeover last week that I ran about, and I haven't seen any follow-on information about it. But from the little article that I read, a Hong Kong entity took over a small South African gold play for a 500% premium to its previous price. So that whoever was holding that stock did very, very well indeed. And I think that's one that probably is not traded on the Western exchanges. But the point is, you're going to see that across the board, I believe. And it may not always be the biggest gold company in the sector that does something like this, because some of them are not financially that well off themselves right now, having made a lot of bad investments in recent years and paid too much for properties. But I think a lot of the action is going to be in the intermediate size gold sector, and also probably with the gold streaming companies. They're going to be more active too. There's one that I follow that had a few months ago had $50 million in the bank to do this type of a thing, and they may have even more now. And of course, some of the really big ones have several $100 million in the bank, so they really have a lot of money to play with.
We'll have more with David Smith right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to David Smith, senior analyst for the Morgan Report. I've heard reports, one of the reasons that China is snapping up all this gold is they expect the U.S. currency, say in 6 to 10 months, may take a major plunge after climbing so long because of the hot action on the stock market.
There are technical indications that the U.S. dollar may have peaked on an intermediate term basis, but I don't know that the Chinese look at the charts and make decisions based upon that. They take the longer view, and from what I've read over the last several years, they have actually gone from being net purchasers of U.S. Treasury debt instruments to actually buying less than they had before, so they're actually, a lot of the money that they put in is not going in anymore to the tune of hundreds of billions of dollars. And I think that's the sort of thing as they take the long view, regardless of where the U.S. dollar is at any given point, and a certain amount of that money is almost definitely going into gold purchases. And in fact, at a Gold Council meeting not too long ago, one of the CEOs of China's largest gold production company virtually came right out. He wasn't even coy about it. He just said he believes that it's important at some point that the yuan be backed by gold as a gold-backed currency. And so we know that by their own admission, they bought about 2,200 tons last year, which out of the 2,700-ton global gold production, that's the majority of it. That's just what they admitted buying. So I think you're going to see this going on. And also, what we were talking about just before the break here, about the premiums being paid as the majors attempt to fill up their gold pipeline. Some of them have been high-grading their property, so they have an even greater desire to get a property that has pretty good gold values to kind of replace the high-grading that went on so that they can make the low grades that they have left pay when they blend those two out to get an average grade. I saw just recently that year over year in August, the U.S. Geological Survey said that gold output in the United States was down 11%. I think you're going to see that sort of thing continuing around the world as the miners struggle to keep up the production that they had before, certainly until prices get back to a considerably higher range than they are now. And that's going to happen, but it's not going to happen overnight. And in the meantime, they're going to struggle not only to stay on top of things, but also add more property so when things do go back that they'll be in a stronger position.
Any chatter you're hearing about concerning the Swiss election, where one of the items they'll be voting on is whether they should return to the gold standard?
Well, of course, the Swiss are going to vote at the end of this month on whether or not they want to require 20% of their currency to be backed by gold. And a lot of people have felt that that's going to cause an explosion at the gold price if they do vote that way, which indications are they may well say yes. But there are a lot of things that they can do to slow those purchases down. So I think after the initial, if it does pass, after the initial excitement, you'll get back to a normalcy. So rather than being a game changer for the gold supply-demand situation, I think it would be one more positive movement in the direction of gold demand, which would just underpin more and more what we're seeing of all around the world, people in large and small entities demanding and buying more gold. And India now is going to become, it looks like this year, regain its position as the number one gold importer in the world. So I think when the market really digests all of these different things, of which just the Swiss potential vote is one, it's going to be obvious to people and many, many more people that really the gold demand is just going to outstrip supply going forward, and prices are going to move substantially higher.
Thanks a lot for chatting with us, Dave.
You bet, Jim. It's been great. Have a good day.
You too. My guest has been David Smith, senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.